Welcome back to the Eric Krown crypto channel, wishing you a happy healthy start. It's like Saturday morning over here as we get prepared to talk about the continuation, my friends, the continuation indeed, as we've been looking at due to the statistics, continuation to the upside a lot more likely than anything else. So the question is now, where does this rally likely lead to? Can I even speak English? And also, where are the areas to be looking for a bit of a pullback on this current drive? Anyways, other than that, I should have once again let you know at the beginning of this video perhaps that the good old Bybit shill link is in the description below, which does allow you 0% on maker fees for derivative contract orders, which is very, very valuable, at least in my opinion, simply because if you are a more active trader, that's more money in your pocket, which I think is, well, which I actually quite like myself. Anyways, what else? Yes, don't forget to hit the derp button and like and subscribe and all that good stuff and whatever the hell else they say on YouTube. And let's just jump right on into it, starting off with the 5-day time frame. So this is the big one that's been giving us a big bias towards upside continuation. The 5-day time frame has done a few things of general note in the past 24 hours since we last spoke. We had a 5-day time frame closure. So where are we essentially in the grand scheme of things? What is the greater picture looking like right now? And how have things changed, if at all? Well, let's talk about this. First and foremost, over here on the 5-day time frame stochastic oscillator, we did observe that there was a nice trendline regression coming in from the last 3 major tops going all the way back to September of 2021. That was this top over here on this rally after the last sort of major downside move from 2021, and the ultimate all-time high of Bitcoin, which was in November of 2021, and then the bull trap, the one major rally that we've really seen over the past year and a half now to about $48,000. All major rejections, obviously, and all playing within the context of this particular regression. What's very interesting about this is that based upon yesterday's 5-day time frame closure, the 5-day stochastic oscillator has actually gotten above that particular trend line for the first time in about, a year and a half or 2 years, or I can't count my mouth right now because still think I'm a little bit underslept after getting like 4 hours consistently for the past week. Finally starting to come back into normality a little bit here, it seems like. Thank God for that. Anyways, yes, the 5-day stochastic oscillator has actually broken that, which does imply that we are looking at a major change in behavior. Now, this was quite obvious based off a few other things, I would say as soon as like a couple weeks ago, but this is further confirmation of it, which can lead into a higher term time frame. So you can see how the daily then spills into the 5-day, which can then spill into the weekly, monthly, so on and so forth. You get the idea. Anyways, yes. So the 5-day stochastic oscillator, the current pivot is actually at $17,000 or just below $17,000, which is pretty fucking far away from current price action, about $5,500. So as long as Bitcoin's above there, momentum remains to the upside, as you can imagine. And that does imply that this rally probably has more legs to go. What also implies that this rally has more legs to go is the overall volatility versus stochastic momentum signature that we are looking at right here. Again, low volatility represented by this indicator, the BBWP, getting to extreme lows, which is 15 percentile or lower in the way that I define it for the past 5 years, has led to an average move of about 42.35% over the course of an average of about 37 days. And I've also taken a first standard deviation measurement right here. And then also I should note that in the past 5 years, the stochastic oscillator has been correcting in the direction of the volatility expansion, actually 100% of the time. I don't expect that to be true for forever. Like, obviously, nothing is always going to have 100% hit rate. But for right now, so far, so good. Anyways, where are we within the grand scheme of things? Well, first and foremost, the average days taken on average has been about 37 days from the setup, which right now we are, I think, about 15 or 20 days mature within this. 15 days. So working on 20 days now would be the next bar. And so what does that essentially imply? Well, we're a little over half, or we're about the halfway mark as to what we expect, historically speaking, for this particular setup to be playing out. So that would imply that, another 15 days, let's say 15 to 20 days from now would put us into early to maybe even middle of February. So I would be looking for this rally to likely continue into those dates. Yes, there will very likely be pullbacks on the shorter term timeframes and in sideways action as well. But ultimately, that would be still within the reasonable realm of likelihood here, as 20 days would certainly be an outlier on the on the downside. In terms of areas of interest, this is where things become a lot more interesting, and hopefully we can shed some light on this. So from the signal given, from the setup given to where we're at right now has been a nearly 34.5% move. Now that is very close to the bottom side of the first standing deviation at 35.25%, which would be at about 23,000 and in change there. Let me just make sure that I'm getting this properly. Let me zoom in right here. Okay, boom, that would be that. All right, so yeah, 35% puts you at about $23,000, let's say. But that's even the lower end of the first standing deviation. And here's the thing: because this setup has already played out so significantly, already, a little bit less than halfway through the average days, I would say that this one's more likely to creep up towards the upper end of the first standing deviation overall. I think that's a little more reasonable. So, if we're going to look at the average move here at 42%, that would put Bitcoin about 24,200 to 24,300. So low 24s basically. And if it goes for the upper end of the first standing deviation, that would be about 49.5%, which would put Bitcoin like $25,500. I also took a min max of this setup here, and you can see that the greatest move was actually about almost 52%. So we really haven't seen too much data outside of the first standing deviation for what it's worth. And what would that essentially imply? It would essentially imply that those areas of interest to the upside, are potential areas that I'd be looking for on a general pullback after the signal is essentially nullified or completed, if you will. And then we just look for the next setup, basically, or I look for the next setup, and you do whatever the hell that you want to do. Anyway, so yes, I do think that this rally can go higher. I think that's still reasonable. And in the short term, can we expect a pullback? Yeah, definitely possible. Coming into next week, keep in mind that CME closed the week at 22,400 or 22,300. So, a short-term pullback somewhere down around like low 22 is completely fine, particularly around the time that CME opens. But after that, still looking up and to the right, most likely. Anyways, moving on to the HPDR indicator. So we spoke about the upside targets based upon the failure of yesterday's setup, which not necessarily a failure is. It's mostly like a breakout. Like what I'm trying to say is that, hey, we were looking at this red line right here as, hey, see Bitcoin trade above this level, you're very likely looking about 9% higher. So far, we have seen about 7% higher almost. So 9% higher, where would that put you? That would put you at the top side of the next 80% of historical range returns highs, which obviously this gets marched upwards and onwards. So yes, we did see basically exactly what we wanted to see for upside continuation, which was rather powerful. I won't go to the full statistics on this one. Doesn't need to be done right now. You can view yesterday's video if it's still relevant to you, which probably not, because we're seeing most of it play out already here. But ultimately, somewhere between about, again, low 23s to mid 23s, and very likely a pullback from that level as well. And then we get to play that game again, basically. So fair enough. Moving and also here, I should denote that this does now provide a bit of a failure here. So failure condition here, which I don't think is going to happen, just like the prior one for the last week. But hey, these things need to be spoken about, just because, well, if you don't, then there's no fucking plan. And that would be about 21,850 or so. So that is to say, as long as Bitcoin's above 21,850 on a closing basis, all pullbacks are higher lows, very likely continues to march upwards and onwards. And moving on over here, should also denote that the daily on CME is actually, the daily CME is showing the 200 simple moving average where? Low $23,000 territory. So still do think that on this next rally, we probably see somewhere around there and a bit of a pullback from that level. And then the question is, does that pullback set in a higher low, basically anywhere above like 22, let's say, just make it a nice round even number. If that holds, very likely looking towards the, I think it was mid 24s, and then after that, like the mid 25s. So also following up on yesterday, we did see that the 4-hour time frame did confirm that, actually confirmed 2 drives of hidden bullish divergence. So again, up in a way, if you will, and now we can get into stochastic momentum over the weekend. So also making me consider that short term is more likely to continue rather than not, is the daily stochastic oscillator remains with its upside posturing on spot price action as long as Bitcoin is closing above 22,400. The 12-hour time frame is also going to be pivoted to the upside albeit in the critical zone. And both of these are in the critical zone. So we're at extremes here, but I do expect the extremes to continue a little bit longer. And that will continue as long as Bitcoin's above 22,300. So same sort of numbers right there. 6 hour time frame, also nice and erect to the upside above 21,550. 4 hour time frame is also going to be vertical as long as Bitcoin's above 21,650. And the hourly is going to be, hey, stop that. Hey, I've just got my, hey, nice one, actually. Bot doing well. And hourly is also going to be pivoted to the upside, or actually will turn to the upside above 22,700, which right now it is below by about $100. So all medium and higher term time frames kind of in concert with each other. Again, suggesting that probably one more drive to the upside. Should talk about this for a second. We're seeing a lot of these oscillators in the critical zone. What does that imply? It implies that on this next drive, which I do think is rather likely, it's probably going to be the last one. Probably going to be the last one before like a greater pullback, if you will, or at least a medium-term time frame pullback. Medium-term time frame pullbacks, again, anything that fails to go below 22 is just another higher low to me. And personally speaking, anywhere down around CME Gapola at 22.3 to 22.4 is fair game for something like that. But in the short term, in the near term, likely continues upwards and onwards. Let me just see how deep into this video we are. All right, it's already 11 minutes, but I'll just briefly go over this. I don't want to go into the full explanation of it. This is hope. I wouldn't say this is hopium. This is statistics still, but we're going to talk about some pretty insane stuff, and we'll go more deep into it tomorrow. But a couple things here. So first and foremost, we had the 21 and 55 exponential moving average cross happen right here. That's a silver cross. It's happened many other times in Bitcoin's history. You can see I've gone through the full backtest of all of them. I think there's like 30 or so, which is a decent amount. And found that the average move based upon that particular cross was about almost 82%. A lot of variance in there, as you can see. In this case, the first standard deviation measures all the way up to like 172%, which is a lot. But just playing around with numbers, 82% would put Bitcoin basically at like 32 to 33,000 bucks, also in alignment with the 0.5 Fibonacci retracement, which would be a pretty easy target if Bitcoin were to resolve this massive falling piece of the upside. Yeah, I fucking hate patterns, but at the end of the day, I like it when it confirms my biases. So just like anything else, right? It's the good old Jesus toast. Show me that Jesus toast, baby. I believe. I fucking believe too. Anyways, yeah. So in the shorter term, you did see that that was a bit of a falling pizza over here as well. That does have a technical target basically to the top side of the greater once resistance, which is, oh, what do you know? Are we seeing that next like mid 23 number pop up again? Oh, that's fucking crazy, huh? Yeah, somewhere around there. So again, do be aware of that. All right, cool. I think that's enough. I think that's enough spewing shit out of my face yet again. Some people say, Krown, you're just talking shit. Fair enough, man. Fair enough. We'll talk some more shit tomorrow, talk some more statistics. There's actually a lot of very interesting new things to be speaking about on the macro, which you may or may not be interested in. So with that said, take care, much love, and see you hopefully soon.